So in this video, we want to talk about Tilray, and they just announced their earnings today. And shares were climbed higher after reported fourth quarter results that beat analysts' consensus estimates on the top and the bottom line. Now, for a minute, I'm going to scroll out to the monthly chart. And as you can see, we had this big monthly buy level at $1.55 that was established back in May of last year. You had this drop in price, one basing candle, and then the rally out. Scrolling down to the weekly chart, you can see that this big zone held not once, not twice, not a third time, but a fourth time. And nested within this monthly buy level, you had a weekly buy level, which was in red. So within this monthly buy level, as price shot higher, you had a rally basing candles and then the rally out. And then within this weekly zone, which go down to the daily chart, you had a drop base rally. Very powerful. So you had a monthly buy level, you had a weekly buy level, and you had a daily buy level. And now we find prices hovering at the $2 level. You can see the pullback from this massive $2.20 support resistance band. So the charts are suggesting that the worst is over. However, to get into the news regarding their earnings, let's get into it. So Tilray generated $230 million in sales in the fourth quarter. That was up 25% from a year ago quarter, and ahead of Wall Street consensus estimates of $227 million. Revenue was driven higher mostly by the company's alcoholic beverage segment, thanks to new products and contributions from its craft beer acquisition last year. Sales from this segment spiked 137%, surpassing Tilray's cannabis revenue of $72 million. So are they a cannabis company or are they a beer craft company? Last year, they acquired 8 beer brands from Anheuser-Busch to diversify the risk of their cannabis business. Here's what the CEO had to say on the earnings call. Over the past fiscal year, their strategic acquisitions have significantly benefited their financial results, which they expect will continue to benefit them in the future. Now, the company finished fiscal 2024 with a net loss of $224 billion, which is significantly improvement over the loss of $1.4 billion in 2023. That improvement likely also spurred investors' optimism along with the company's 2025 revenue outlook. Management estimates full-year sales between $950 million and $1 billion, which would represent a nearly 24% increase at the midpoint. So from a fundamental standpoint, it appears the worst is over. From a technical standpoint, it appears the worst over. However, if you get a dip back below 175, that would be an opportunity to get long if you haven't gotten long, or to dollar cost average if you're already in the stock. Thanks for watching. Subscribe. Please like the video.